All right, what's up? How we doing, guys? I think we're ready to rock. You guys ready? Let's hit a little midday session here and see what's up, man. We've got bar 31. Market is tanking, by the way. Though, I gotta tell you, as we take out the wick low of bar 9, I don't know. Am I super convinced we're just gonna bear trend the rest of the day all the way to 25K? I gotta tell you, given the environmental context lately of range, I'm not really too convinced. I'm not too convinced until the bears want to prove it even further. Though they already have kind of done their job, eh? Coming down from 25.4 almost. What a move. What a move. Who made some money on that move? I know some of you guys did. Some of you guys probably also got maybe blown up on that move. That's all right. Keep it moving. Keep it pushing, big dog. Good morning. How are we? Brandon, good morning. Gamma, good to see you, brother. News, how we doing? Big Chris, what's up, brother? Matthew, how are we? All right. Now let's see if this market pulls on back in to this big range. What a move. Well, I don't know, bulls. You know they're trying. You got the wick low on bar 30, now the wick low on bar 31, closing up here 25 seconds. Bill took short bar 26, took a little heat, but got take profit. Yep, 26 is a good bar. Chris, good morning. Derek, how we doing? Cheryl, good to see you. All right, man. I'll tell you what, I think the bulls probably take this back up into the range. That is just a contextual, speculative assessment here. So let's see if they got it. Anthony, 25,300, the range? When I say range, I'm talking the midpoint of the day's range. And I'm not putting a target on it. I'm just saying in general. In general, I do think the bulls are probably going to at least try to take us back up into that range. Where to? I don't think that way. I don't know. I mean, you could say 320. I don't think that way. So that'd be a lie. I just mean they're going to try to take it back higher probably at some point here in the near, sooner rather than later, rather than the bears trending it all day. We just haven't been seeing that lately. Now, if that does happen, that would really be tremendous for us. But it is the lower probability event right now. Javaz, big man. Now, by the way, understand that when I say that, I'm not saying, you know, that buying this is such a high probability thing. What I am saying is, I go on and on about this in the tomb till I'm blue in the face. Less so here, but you guys have heard it plenty of times from me. This is all just a math equation. That's all this is. Okay, so if you buy the lows here, because you're like, well, it's been a range market, I really don't think we're going to bear trend here, at least until we get somewhat of a pullback. Where do you put your risk? What's the most logical place to put your risk? Well, if you were going to buy like the close here at bar 32, for example, that's kind of a different kind of trade, right? So what would you risk? Well, you'd probably risk the wick low at 30. What does that make that trade? How does the math look on that trade? Or what I should say, a better question is, what's the equation like on that trade? Reward to risk versus probability. The probability is not great. Because look, bar 24 to now. Not great on probability, but reward to risk can be tremendous. Because if you're right, you can squeeze some juice out of it, most likely. But chances are, you'll get stopped out, move on with your day. That doesn't mean it's a bad trade. I can't stand when people generalize trading stats and start saying, all you got to do is, you know, have your winners be bigger than your losers, etc. It's like, that is such a general statement. I mean, I could also just say, all you got to do is go for 1-to-1 reward to risk on every single trade and then win more than 50%, or I guess 52% to cover fees and commissions. Okay, sure, but does it make logical sense to go 1-to-1? Are you going to force an arbitrary 1-to-1 reward to risk on every trade you take ever? Each individual trade has a logical stop, right? So, don't get me started. All that to say, though, if you're buying down here, effectively what you're taking is a high reward to risk, low probability trade. So you cannot be mad if you get stopped out. That's the bet you took. There we go. Bulls trying. Taking it back up into the range. What do you say, Bulls? You want to do it all the way? Yep, what we talk about, Bull's going to try to take it back up into the range here. Again, environmental context is also very important to keep in mind. I've been talking about that a bit more lately, which is when I say context, I mean intraday typically. But environmental context is what's been going on the last, week, 3 weeks, 6 weeks. What's going on in the market lately? And the answer to that currently is, well, for the last maybe, at this point, 5-ish weeks, it's been hesitant to continue breakouts and quick to range. Now, volatility has not been so bad. The ATR today is not, huge. It's 30. But volatility hasn't really been the issue. The issue has been that the market likes to range in its early developed intraday range, which means that breakouts like this, they're not ranging really. I'm sorry, they're not trending really lately, are they? Especially at a lower rate than they typically would in your average everyday market. That seems to be the case lately. So you got to keep that in mind because, it's a very real thing. If everyone else kind of notices the same thing, algorithms notice the same thing, aren't they going to be quicker to bet against that breakout than they would be in especially a trend market, but also an average market? If it's more of a range market than average lately? I think that makes logical sense. So then you get some of this stuff going on. By the way, heads up, you got 11 days. 11 days until 90% off at Apex is up. So you've got time, man, but 11 days goes quick. Code big, baby, B-I-G. Chris, no. Apex does not have direct to fundeds. But what Apex does have is very inexpensive evals and single day pass. And a lot more clear rules now. But the inexpensive evals and the single day pass that's a big, I guess you'd say, selling point for Apex. To me, that's a big deal. That single day pass is huge. Which, it means you don't have to pass in one day, by the way, but, you know, you'll typically try to. That becomes more and more true the better your prop trading ROI is. Opportunity cost is a thing. All right, Bulls, what do you say? Let's go take out the wick high at 23, man. Let's do it. So what I want to do, actually, I've been meaning to do this. I'm going to run a poll. Just answer honestly. There's no judgment, of course. For those of you guys trading prop. Here. We're going to get a gauge. I'd like to have a bit better, I have a pretty good grasp, but I'd like to have a bit better grasp on how many of you guys are struggling to get to the funded position, or if you're already in that position, like all you guys, and you're struggling to just get payouts, or if you're just fucking killing it and you're not struggling and you're just here to chill. I imagine most of you guys are probably struggling to get to the funded stage, right? Autumn says, I get funded, then blow it. Yeah. Javaz, both. Big E struggling to get payouts. Both struggling for the payout. Funded, then blow it. Okay. Okay. I think you guys probably underestimate how, I don't want to say different, but how, I guess I'll say different. For me, the trading looks in fundeds versus evals. I'm not the guy who's going to say, got some evals to pass, let's full port CPI. Like, that's not me. But I trade small per account in the fundeds, and I scale it horizontally. But if it's time to pass some evals, again, I'm probably trading more responsibly than most people in the fundeds. in their fundeds, in my evals, maybe. But like, it's It's, for me, the evals, it's a means to an end. I scalp, I size up, I take lower quality setups. Like, I'm definitely not sitting here trading 2 micros in an eval, waiting, 3 hours because there's no setups that I would take in a funded. That, But I think my standards are also high enough in the fundeds where you can understand that it's not so ridiculous, just straight up fucking gambling in the evals. It's not that ridiculous. But I get aggressive, I think is the right word. So if you're trading your evals kind of the same way as you're trading your fundeds, if you're new, that's a very good thing. If you have yet to seen any kind of ROI because you haven't had payouts yet, then you should be doing that. But as you get to payout territory, the way I think about it is like the way you trade your fundeds should stay the same, and the way you trade your evals, the difference between those two should get bigger. Because you should be stepping up to the plate more in the evals. I don't mean 10 minis, 6 minis. I just mean scalping aggressively and doing your best to get through them, size down into the finish line to increase the probability that you pass, get in the funded, move on. Yes, of course, I trade RAM in the evals too, but you gotta understand, guys, a lot of you guys, people in the tomb, they get it because there's so much nuance in there, but a lot of people on YouTube, they oversimplify, and I understand why, but they oversimplify RAM. You put RAM in a box of 2 to 3 continuation bar setups. That's it. That's not RAM. That's one of my favorite sides of RAM, but RAM is a methodology. It's a top-down way of thinking. It's not a setup. I don't want to make it sound overcomplicated because I made it simple on purpose because I don't like being confused, but it can't just be a setup. That doesn't work because context in the market changes, right? So yeah, everything I'm doing is RAM. It's just, it might look a little different, especially depending on the day. And if it's, personal accounts, fundeds, or evals, it's going to look a little different, but it's recognizable is the point. Nico, question. Seems like most have issues with blowing funded accounts. Any advice? Yep, size down in the funded accounts and be more patient. The reason I think the problem is, and look, it's not just you. Everyone does this. I would start slipping into it too if I was trading way too big. Everybody would. The problem is you don't put yourself in that situation in the fundeds. Okay, now you're like, that's very general, bro. Say what you mean. What I mean is you're making emotional errors that are blowing your fundeds because you're taking trades that you don't necessarily believe in, and you're probably trading too big. So you're taking counter, like in a trend. Your thought process is as follows. It's gone really far, man. You're ignoring context that it's a trend market, for example. Not right now, but in general. And you're like, man, it's gone really far. Probably won't go much further than this, right? And you buy, and it's a big bear trend. And then you get run over because, there's a 70%-ish probability that it continues lower. And then you start averaging in. So now you're way too big. You've got like 6 minis on and it blows instantly. Yeah, no shit. That's not going to be too good for your mental health and your confidence as a trader. To me, there's a difference between being aggressive in an eval, being aggressive in the fundeds. Like, for example, it's high of day in a trend, and you have a nice bull body closing clean. You're in the funded accounts. Being aggressive looks like stepping up to the plate and hitting it. Even when everyone else says, ha, you bought high of day, you fucking idiot. Yeah, you're damn right I bought high of day. Because it's one of my best setups and it fucking keeps me paid. That's being aggressive. Being aggressive in the evals to me is Doing my best to scalp my ass off and working hard at it and getting through it. But doing reasonable things that make sense within the micro context of what I'm looking at. Being aggressive doesn't just mean trading huge. You know, that's not what that means. Which is what most people do. And it creates emotional mishaps. And you know what? It's not, there's nothing wrong with you. I would do it too. You just don't put yourself in that position. All right, well, we got 15 seconds out here till bar 36 closes up. Someone says, I had 28 funded accounts for over 2 months trading micros, blew 2 of them. But I've been slowly growing my balance on the others. I haven't taken a payout yet, but I will. Man, 2 of them, I wouldn't even... Look, even, I assumed you were going to say you blew all of them. And I was still going to say, I mean, look, like, you had proof of concept, right? You got into the fundeds, you had them for over 2 months, you were trading small. So just fucking run it back and do it again. Look, guys, I don't know how else to say it, I guess. There's a universal when you make mistakes as a trader. And it's not even necessarily mistakes. It could just be typical drawdowns, regular, statistical, you could call it anomalies, or just normal losing streaks, or you have an emotional mishap, you know, you average in, you whatever, you blow a bunch of fucking accounts. There's a guilt that all of you have felt. And it's not just you, it's everybody. Every trader goes through this many times throughout their career, kind of front-loaded to the earlier days, the earlier years, I'll say. But you're going to go through it, and you're going to go through it again, and then again, and then again. That's the point. Isn't that feeling means that you suck or that you can't make this work. Everyone feels that. Even top dogs feel that. It's not just you. You know, you look back on the day, you're like, wow, that was really stupid. Or wow, that was a really bad day. Maybe I'm not as good as I thought I was. Every single trader deals with this, you get it? But if you let that feeling win, you're like everybody else. The only difference between the top dogs and everybody else is that they don't let it win. This isn't meant to be a motivational speech. This is just the truth, dude. You're not special in that feeling is not just you. It's everybody. Even top dogs, it's okay. Just get back up. So what? Oh God, I made a bad decision trading. My life is over. It's trading, dude. It's money. The point is to have respect for money, but not really care that much, because then you'll make a fucking lot of it. Alright, so looking at this, my question becomes, after that big bear run, do we take a second stab, maybe take out the wick low of 30, maybe not, but form a little sideways range here? Yeah, that's what this kind of looks like to me, I tell you what. Chris says, I blew 7K the other day, making the exact same, oh, it ran too far, it must come down mistake that I mentioned earlier, but rebounded, just requested 5K today. By the way, guys, yeah, these bad trading days, I'll say, red days or mistake days or whatever you want to call it, mishap days, glitch days, whatever. Blew every account you had days. In the moment, you're like, oh, I've done it now, you know. I promise you it's not a big deal. As much as it feels like it is, you're like, no, Nico, I lost a lot of money. I promise you, obviously there's varying degrees of how you know, bad it is. But if you just put your head down and get up tomorrow and go back at it, you're gonna come back faster than you thought. So why dwell? If you dwell, you're only delaying the inevitable that this mistake is not gonna linger as long as it feels like it will. I don't even remember, genuinely, 95+% of my red days, maybe more. I don't even remember them. You're not going to either, it's okay. You're like, I don't know, man, I had a pretty bad day yesterday. Yeah, well, give it a month. You'll be like, well, that's a distant memory. Who gives a shit? I've taken a lot of trades since then. You want to talk about a loss? Go read about Bill Ackman. How's he doing today? He's all right. There's always a bigger fish, and you can always come back from anything. All right, we got the bears testing the low of bar 30 here. Equal lows, question mark? We'll see, FX. We shall see, big man. To me, I would look at it, you know, I wouldn't necessarily call it whatever you want. I wouldn't necessarily call it equal lows because, you know, we a little further, a little less, whatever. General sideways range here, maybe, between bar, we'll call it like 29.30 and the current bar. Of course, you know, the counter argument is, hey, this is just a breather to a big bear trend. Sure, I hope you're right. I love trends. It's just in the market we've been seeing lately, that's definitely not the most probable outcome. But hey, I'm here for it if we get it. Drewski just bought a funded with code BIG, my man. Struggling to take out the low of 30. Big E! Anyone notice Apex increased the prices on the account so the discounts end up not being quite as deep? Yes, sir. Prices always go up. You know what the answer is? The answer is, I'm not saying you're complaining, big dog, not you. But you know what most people do? They sit around and fucking complain about it. You know what you need to do? Because the only answer is, you need to make more money. That's the only answer. Oh man, gas prices are out of control. Come on, man, don't let that be you. Don't let that be you. You're worth more than, you know, talking about gas prices are up 80 cents. Come on, dude. Yes, everything goes up. Everything's very expensive. Life is really, really ridiculously expensive. What's new? Make more money. That's the answer. Not save your pennies, not this other bullshit. You have to just make more money. It's the only conclusion that makes any fucking logical sense. All right. Here we go, 2 minutes out. "60 seconds. All right, let's see. Let's see, my man. All right, 20 seconds. Got to go ahead. Get that copier engaged. We got bar 39 here. Come on, Bears. Come on now, Bears. Go ahead and place that guide. Beautiful placement, by the way. And we'll see if the Bears bounce this thing. If they do, we're looking at a soft bear channel or maybe a big trading range. But if they want to take that, then I will participate. Volatility's low, man. ATR's 25, 26. Kind of a slow Friday here so far. Give that 25 seconds instead of 30 just because of that reason. That soft bear channel look. All right. Nothing. So we move on to bar 40. How's that sound? All right, 2 minutes here from bar 40. Question, Nico, do you think that they go through with lowering the PDT requirements? Honestly, I fucking hope so. I really hope so. Dude, you're trying to get me started, aren't you? Yeah, I didn't catch on. I hate PDT. Hate is a strong word. I hate the PDT rule. Oh my God, the dot-com bubble burst and people got hurt. Yeah, some people also got really rich. But people got hurt making their own decisions with their own money. Let's protect them from themselves. Like we live in China. Jesus. Man, I don't care if I've got $8. Let me day trade. I want to take as many trades as I want. Let me take the risk. It's my shit. It's my money, right? I've always thought it's so ridiculous. There's so many people who can't pony up, 30 G's to day trade stocks. I mean, first of all, futures, if that's you, like, you're home now. Futures are your home. But for stocks, you got to have at least 30 because you need 5,000 a buffer, right? I've always thought that that's absolutely insane. You should be able to day trade even fractional shares with 8 cents if you want. How stupid. Question, Nico, I remember you suggested trading 3 to 5, like 2 to 5 micros on a 50K funded account, for example, per account. Scale horizontally, right? Just increase the number of funded accounts, not the amount of contracts per funded account. Do you think trading only 1 micro on a 50K funded is a good idea? Thanks again. If you have a lot of screen time under your belt and you're an experienced trader and you have a positive ROI, you've taken payouts, then I think 1 micro in normal volatility conditions, not extremely high volatility conditions, is small. That's a little too small, I'd say. But if you're newer and you've only taken a few payouts and you're kind of taking it easy, trying to develop your edge, trying to get your emotions under control, you don't do so well at, 3, 4, 5 micros and you're like emotionally making mistakes at that size, 100% trade 1 micro. There's no shame in doing that. 0. And I don't say that like tongue-in-cheek. I mean that. There is no shame in trading 1 micro. It's a very mature decision, actually. It doesn't make you cool, by the way, to trade 6 minis in a prop account. Like, I get it. Like, I could sit here and trade a bunch of minis on stream and everyone would love it, blah, 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 but it's like, I don't know. I guess it's good entertainment, sure. It's entertaining for people to watch, but it's about it, really. If your goal is to take payouts, that's too big. You're not giving yourself room for normal drawdown. In a 50K funded, 2 to 5 micros is plenty. Plenty. I've taken lots of payouts at that size. It's not that slow either. It happens quicker than you think. All right, we've got the wick high at bar 34. Yeah, I mean, a small to moderate bull body. I'd like it to be a little up here. Make that math a little better for a limit order reversion scalp, but that would be a bet on a soft bear channel, which it's definitely a little early to make that bet, I will say. But that look is starting to come together a little bit. All right, let's see what 42 does. All right, in the meantime, I will be back in 2 minutes. Don't you go anywhere, big dog. All right, what's up? Bar 45, 4 minutes out, 4 minutes 5 seconds here, still in a tight little trading range. Since bar 39 here, I gotta tell you, this looks to me, if we can take out the low at 39, then to me this becomes much more of an argument for a soft bear channel. Much more. Right now, being that the environmental context of the market overall for the past, we'll say, month, being that it's been range, my assumption here is not necessarily soft bear channel. We could very well just be seeing a bear wedge, right? You kind of bottom out here, turn this into a sideways trading range, and then fade back into the range. I'd be quicker to make the assumption, by the way, of a soft bear channel if we were looking at a trend market, or even a more normal market. What's up, 2B? How we doing? All right, I'm gonna run a poll here. And this is basically asking, does this turn into a bear trend or soft bear channel? In which case you would say yes. Or are we gonna sideways range or head back upside into the full day's intraday range? I think now's about the time to ask. Does NQ dump further, yes or no? All right, there's the open of bar 46. You know, I really don't think it's the craziest trade in the world if you were to get long here and risk the wick low of 39. Again, low probability, high reward to risk. All right, 225 out here to close of 46. Watch how it closes up. That wick low of 44, by the way. That right there is not doing wonders for the argument for a soft bear channel, is it? Alright, watch 46 inside close. Yeah, 46 is going to close inside the wick high of 45. Market just isn't quite sure yet. Am I looking to go long or short? Well, depends what the market does here. If the market takes out the low of 39, then ideally I'm looking more for limit order reversion scalps to the short side. If it can't do that, then I'm quite a bit more interested in taking more of a swing position and risk the wick low of 39. To the long side, right? So I can't quite answer that yet. Ooh. Had to sneeze, my bad. All right, 39. Let's see if the bears can take out the wick low of 39. Looking a lot more like a sideways range here, starting with bar 39 to me. So the fact that the bulls and the bears are both having trouble on the outskirts, that's not so surprising. Man, if these bulls could just give me like, well, we got 26 seconds out. This is probably going to close as a bear bar, of course. If the bulls could just give me a couple bull bodies closing above the wick high of 41, it's over, dude. Give me a stop limit buy and a half hour and we'll fucking book it up. So clearly to me, this looks like a wedge and a sideways range, which is worth a small scalp. There we go. Oops. There you are. And man, that's tight. I'm going to keep it tight. ATR 24. Half ATR scalp, pull it in the middle of the range. Let the copier flatten. All right, small trade. Keep it moving, man. Oops. Update that trade counter. One down! All right, we're about 60 seconds out here from the close of bar 48. Volatility's low, by the way. ATR about 25. Now, by the way, the tighter this gets, remember on that scalp, we looked at this and this, the tighter this wedge gets, to me, the tougher it is to put together a scalp. It just gets tougher and tougher to structure a trade that makes logical sense and that makes for good math. Because you know it's going to pick a direction and break. Which way? Yeah, it's probably inside of 55-45% with a slight bias toward downside. Minute 35 here from the close of bar 49. ATR sitting 25. Yeah, this wedge is just tightening down, isn't it? Yeah, that's right, SR. 90-minute wait for what, about a 9-second trade? No, I think that trade probably took, what, 45 seconds? That's the way it goes sometimes, man. Sometimes it's wait, put on a scalp, book it within a minute, and move on. Some other days you're sitting in a trade for an hour. Got to be ready for it all. By the way, reminder here, Apex is 90% off here. Code BIG, B-I-G, which is the best the deal is gonna get, big dog. So go hit it. You've got an afternoon here to pass some evals for next week. What are you waiting for? Man, you see this? This wedge just getting tighter, tighter, tighter. It'll break. It'll break here very soon. ATR moving lower, down to 23 now here on the ATR. Again, ATR, that stands for average true range. It's the average range in points of a 5-minute NQ bar in this case, since that's the chart we're on. And 23, 24, that's pretty low. That's pretty low. Below 30, you're starting to get into lower territory. Before 20, our job starts getting tougher. Below 10, time to walk away. Question, when it comes to scalping, do you find that sometimes the algos are on kill, like they're not going to let you win? Other times it seems much easier, with way more order flow and continuation. I think you're thinking about it with a victim mentality, Nathan. Though I get it, a lot of people think of it that way. What's really going on is the market is just ranging and you're betting on breakouts. That's what's going on. You're betting on breakouts in a tight range market. Is it the algos screwing you? Not saying that's what you mean necessarily, but a lot of people think of it that way. Nope. The market does not care about your sim-funded account, for example. But if you mean the price action in general that you're just participating in, well, now we're back to price action, right? So it's a range. So yes, I'm betting on breakouts until it's time to obviously bet on the breakout, and the range is clearly gone. So I want to show you guys something. I know I've drawn this about 20 times now, but let me just draw it again to explain something. You don't overthink it, right? To short a small to moderate bull body for a limit order reversion scalp in the upper end of this wedge. Is it a logical trade? Yeah, sure, it's a logical trade. You could draw it like this, you could draw it like this. Don't overthink it. The problem is, half an ATR, you're looking at least 11 points. Well, I mean, even if you get a reasonable entry here, just half an ATR is already getting deeper than the midpoint of the trading range, which starts to shift it into an uphill battle, even for a tight scalp, which means we gotta let this thing snap up. Hey, if you haven't yet, by the way, hit the like button. I appreciate you doing so. Or dislike, big dog, whatever floats your boat today. You're having a bad Friday, man? Take it out on me. Take it out on that dislike button. I hope it brings what you're looking for. All right, 3.5 minutes out here from the close of bar 51. Ryan says, I started dollar cost averaging from one side to the other of the trading range with stop on the opposite side of the range, then small risk, larger reward. Logical thing to do. It's logical scalping. But you gotta understand that when you lose, it depends how you're executing it, of course. You said small risk, larger reward, so I'll believe you. Usually in sideways ranges, the logical thing to do is, like in a personal account, you can't really do this as effectively in a prop account because you can't get small enough on your initial entry. You can't go smaller than 1 micro, right? But in a personal account, especially a bigger personal account, is it logical to buy low, sell high, buy back lower, scalp in a sideways range? Sure, it's logical if you're willing to average in around the edges. Start really, really small, and then slowly build that position out and scalp around the core of the range. Not around a core position, but around the range. Sure, it's logical if you can manage your risk. And you gotta understand that your win rate in that is gonna be really high. Your reward to risk usually is gonna be pretty low. The math can still work, but psychologically, most people aren't going to be able to make it work because that loser, when it comes, is going to be big. At least quite a bit bigger than your winners have been. If you know that that's coming, sure, you can make the math work. Is that a way that I think beginners should trade? No, it's going to hurt you. All right, we got bar 51, 45 seconds out. Now, a little nuance here. Remember the wedge? Bar 51 is trying to turn this into a sideways range now, which starts to make the reasonable look from, well, here. The first look was a soft bear channel, which then turned into a bear wedge, really, which is now trying to turn into a sideways range, or a sideways range. However you draw it is fine. Don't overthink it. Don't overthink it. Actually, the less thought you put into it, kind of the better, because you got to understand, you're averaging like 100,000 traders and algorithms. They're not, you know, they're all going to draw it a little bit differently. So if you just kind of draw it within reason, you're probably pretty damn close to the average of how people and algos would think about it. So the fact that that is turned from a soft bear channel look to a bear wedge to a sideways range. Remember I said it's 55-45 probability with a slight bias that we break the wedge downside because the flat is typically a little weaker than the angle. That includes bull channels. Well, now that we're bringing it into a sideways trading range, what is that probability now? Do we break upside or downside? What's the probability approximately? Close enough to call it that. Can anyone tell me? Ryan, big dog, the only one to answer the question. It's 50-50. It's close enough to 50-50 to say 50-50. Manuel, good work. All right, 3 minutes till the close, bar 52. Diggs, what's up, big dog? How are we? Around here, we trade, or at least I trade RAM, which is the price action methodology I developed for myself and trade every day. And there are numbers under the candles. Because we're international around here, big dog. And trying to deal with time zones, I don't get how people do it. I'm trying to say the 1025 bar. We've got 24 time zones here. All right, let's see what this soft bear channel into a bear wedge, into a single bar, not a single bar, well, kinda, into a sideways, we'll call it, trading range. Let's see what it turns into. Right now, we're dealing with about a 50-50 probability of the break higher or lower. I know you want me to say it's about 70-30 one way or the other, but I'm not going to lie to your ass. It's about 50-50 right now. That's straight up, that's the probability. So we deal with it. Bulls are trying. Let's see what they've got. What do you guys think? Can they break it out here? All right, live flash poll. It's out. Vote. I'm going to run that for about 1 bar. We'll run it for the remainder of this bar. 4 minutes. Get that vote in. Do the bulls hold this breakout? And when I say breakout, what am I referring to? I'm referring to this sideways trading range. Or do the bears fade it right back in? I don't necessarily mean on this exact bar, by the way. I mean over the next few bars, but we'll end it at the end of this bar. We'll fade, then push again? Yeah, we'll see, man. We'll see. A bull breakout here, continued, would be nice. Justin, we're on NQ, 5-minute NQ chart. $250 out from the close up of 53. We got a minute 45 out here, and then I'll end this poll. Currently, we're sitting at 74% of you guys think the bulls are going to hold this. That's pretty high, man. I hope you're right. I hope you're right. 90 seconds. We still have that wick high of 41, by the way, to deal with. We'll see what that brings. Trying to take it out. I like to be a little careful, by the way, making the assumption of big, giant reversal on the early trade, which this bar would be. The early trade when volatility is low. I like to be a little bit careful when volatility is low. If volatility is higher, I'll be a little jumpier to it, not in a bad way, but in an aggressive way. All right, there we go. Taking out the wick high of 41, still struggling to tab. 20 seconds out. But when volatility is low like this, ranges tend to be a little more brutal. So bulls, if you want my stop limit buy, man, prove it to me. All right, that's it. End the poll. Where do we sit? 73% of you guys think the bulls are holding this thing. Let's see what they got. Man, bulls hesitating. First minute 20 of this bar, bar 54. We're getting some hesitation here out of these bulls. And Volta, oh man. ATR now down to 21. Probably going to see that ATR dip beneath 20, which is not tremendous, not ideal. Hopefully we'll just blow this out of the water and get that ATR back up to 45 here for the afternoon. Would be nice. All right, 54 is sitting basically as just almost a doji here. Halfway through bar 54, we'll see how this closes up. If this were to grow and turn into a nice clean bull body, ideally not huge in size, right? But I don't want a tiny little bull body. Then I might just get long here. We'll watch how it closes up. Right now, bulls are struggling. 2 minutes out. Man, bulls. Bar 54, man. Come on now. 45 seconds. Basically unchanged in 3 minutes, this bar is. Poker says, I thought the inflation report was bad. Man, WTF. Yeah, well. The market doesn't react how you would expect to news because the market bakes in expectations. The market reacts in the way, how do I explain this? The market has certain expectations already for the news, whether it's good, bad, or neutral, compared to, I guess, the neutral expectation of the public. Okay, so if the market expects bad news and you get bad news, but the news is worse than expected and it impacts the market in a negative way, then you'll oftentimes get a bear move. To what extent? That's the question. All of this is so nuanced, and the same way that if the market expects there's a million ways to go at this. If the market expects good news, but it only expects slightly good news, but you get really good news, you might get an initial pump, and then the market might decide, wait a second, that's a little too much, because we got a follow-up statement or something, and then it'll pull in kind of hard. All of this is nuanced enough to think of news as a day trader as 50-50. Just trade the price action. You're making your life more complicated than it needs to be, trying to play a game that you shouldn't be playing, which is trading the news. And, you know, by the way, not to keep going at this, but another example just to clarify, if the market expects that a news release is going to be really, really bad, if it is really, really bad, the market might not move very much. And if it expects it to be very bad, and it's only a little bit bad, then the market might pump. Which confuses the hell out of beginners, for good reason, by the way. You just got to understand, the market's baseline is not neutral. The market's baseline is, what does the market collectively think the news is going to look like compared to that neutral baseline? Does that make sense? Well, the bulls are struggling, man. We had 74% of you think that the bulls are going to hold this move. So far, they're holding it, but they're holding on by a thread. Definitely not some big trend continuation breakout back toward high a day, at least not yet. All right, guys. Bear's trying to take this back to the range. I'm going to go hit lunch. Happy Pharaoh Friday. We caught a scalp. We booked up some profit, didn't we? We got some work done. I will see you guys next week, man. Hey, please hit the like button on the way out. Enjoy the rest of your day. Rest up this weekend. Your job this weekend is not to sit around feeling guilty because you can't trade. I get it. I know. Market's closed, and there's nothing you can do about it. And if you tweak out all weekend, you're going to show up to Monday probably not too ready to go. So rest up. Take the load off your shoulders. There's nothing to be guilty about. There's plenty of opportunity come next week. All right? All right, guys. I'm going to go hit lunch. I will see you soon. Enjoy your Pharaoh Friday, dude.